So far in 2025, Alibaba's stock price is up 66%. And even with this relatively large move up in a short period of time, the stock is still looking fairly undervalued. So in today's video, we are going to take a look at the next couple of catalysts that could come through and send Alibaba's stock higher, as well as I'm going to give my opinion on a price target of where Alibaba could be trading a year from now. Thank you guys so much for the continued support on the channel. We have just passed 5,000 subscribers, and that is absolutely insane. I really appreciate you guys dropping likes on the video and subscribing. It really means a lot to me. And if you want to simply help the channel out, you can drop a like down below. It costs absolutely nothing. And if you want to catch more videos like this one, make sure to subscribe. And if you've been a long-time viewer of the channel, you know that I take a lot of pride in making sure that I'm transparent with you guys, especially when we're talking about positions that I hold. This is the YouTube portfolio. It currently is sitting at a value of $60,175.51. And the stock that we are going to be talking about here today, I do hold in this portfolio. I have 15 shares of Alibaba, currently up around 83%. And in my larger personal portfolio, I also hold Alibaba, almost $20,000 worth of the stock. On top of Alibaba, I have Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. Currently, we have a cost basis of just under $16,000. However, the market value of these positions is almost $22,000. We also hold positions in SCHD and VYM, which are two dividend ETFs. The cost basis for these positions is just under $25,000 with a market value just over $29,000. And then we have a pile of cash sitting around $9,000 currently. But the stock we are going to be talking about today is Alibaba. I originally started buying the stock back in 2022 when it had already fallen by well over 50%. However, over the next 3 years, I continued buying the stock despite it falling another 40%. But more recently, we have seen Alibaba actually sustain some higher prices, and this is very good to see as a long-term shareholder for Alibaba, because previously over the last 5 years, we saw them spike up to around $120 per share and then immediately fall back down. This happened 3 times over the last 3 years. However, today we have seen them go well past that $120 mark to around $140 per share and sustain that over the last few weeks. And what I find very interesting about Alibaba's stock is that as of the most recent 13F filings, there were only 5 super investors who held positions in Alibaba, 3 of the most notable being Michael Burry, David Tepper, and Guy Spear. And what's very interesting about this is it tells me that Wall Street has not woken up to the opportunity yet in Alibaba. There is so much money out there that could potentially go into Alibaba when people start realizing the value of what Alibaba has to offer. We can see that some of these super investors have massive portfolios: $110 billion, $44.6 billion, $26.5 billion, $42.4 billion. There are so many billion-dollar portfolios that don't contain Alibaba yet that could potentially have it in the future. And if we start to see Wall Street warm back up to China, there's no doubt that Alibaba will be one of the key beneficiaries. And when we see that money come back into the stock, that's when we will likely see another leg up in the stock price, maybe even to that $175 to $200 range. And some of the concerns that investors had over the past couple of years around China are starting to melt away. Specifically, we've seen Xi Jinping actually meet with entrepreneurs throughout the country to help build some confidence around what China is actually going to be doing in the future to help promote businesses. And Joe Tsai, one of the co-founders of Alibaba, was actually present at these events and gave the following statement about the meeting. "I wouldn't underestimate the importance of that event. The message is very, very clear that the government is looking to private enterprises to come back and boost the economy." And this is a huge change of pace for the Chinese government. It looks like they are now going to work more closely with private companies throughout the country. Previously, they had taken aim at large tech companies, especially Alibaba, and accusing them of monopolistic behavior. But here today, it looks like they are backtracking a little bit on that and going to work with these companies to better improve the overall economy. And if statements like this from Joe Tsai isn't enough, the fact that the Chinese government even invited Jack Ma to these meetings is a huge move in the right direction, because Jack Ma was previously very critical of the government, but now it seems like they have got gotten back to better terms, which overall should help Alibaba. And this meeting wasn't just all talk. Alibaba came out of it and committed to $52 billion in cloud computing and AI infrastructure over the next 3 years. This is massive not only for Alibaba, but also for the Chinese economy in general, because all of these facilities will require labor to build out. However, the biggest problem for Alibaba's stock price really hasn't been the Chinese economy. Yes, it's been a concern, but the biggest problem has been their valuation. They are currently sitting at a forward P ratio of a 14.43. This is well below the broader market. For perspective, the S&P 500 is currently trading at a forward P ratio of 20.48, while the Nasdaq 100 is currently trading at a forward P of 24.47. What that means is that right now investors are looking at China and Alibaba specifically and saying that it should be trading at a 30% discount to the broader market just because it is a Chinese-based company. The good thing about investing in Alibaba is there are two clear ways that the stock price can move up over the next couple of years. The first we just talked about, that is valuation expansion. The second is growth in their top and bottom line. Their bottom line is only expected to grow by 5.2% in 2025 and then 13.6% in 2026. And top line numbers are only expected to grow by 6.2% in 2025 and 7.5% in 2026. In my opinion, these are very low estimates from analysts. What that means is it is setting up Alibaba to come through and beat these expectations, especially if we see a turnaround in the Chinese economy. And we can use these two variables to come up with different price targets for where this stock could go over the next couple of years. I pulled 2026 numbers. What that means is that Alibaba, if they underperform, analysts have them coming in with $8.65. Inline performance would be $10.28, and then outperformance would be $11.20 in 2026. I think that the bare minimum that Alibaba should realistically trade for is a 15 PE ratio, and this really is pricing in, again, a difference between US and Chinese companies. If investors stay a little bit wary of China over the next couple of years, I think we could continue to see Alibaba trading at this valuation. However, more realistically, I think a 20 to 25 is a fair value for Alibaba. Even if they underperform this year, that means that the stock price could trade anywhere from $130 per share to $216 per share, or a middle of $173 per share at a 20 valuation. What I think is most realistic is probably Alibaba coming in with this $10.28 of EPS. That means that the current PE ratio is sitting at 13.73. If we see valuation expand to around a 20 PE ratio, that would be a stock price of $205 per share. I think that a 23 to a 25 is also reasonable. That would result in a stock price anywhere from $236 per share to $257 per share. And if we see a massive turnaround in the Chinese economy and they start putting up huge EPS numbers of $11.20, that would be a forward P ratio of 12.6. I think if we see that coupled with a change in sentiment around China, as well as faster growth for their top line numbers, we could see Alibaba trade between a 25 and a 30 PE ratio. That would be anywhere from $280 per share to $336 per share. So obviously the price targets for inline and outperformance for Alibaba are very interesting and can be very exciting. However, the reason that I own Alibaba is because of the numbers over here. The underperformed numbers for Alibaba are still very positive. There's a very low chance that you could lose money on the stock, in my opinion. And even if we see a little bit of change in valuation and still the stock underperforms, we could still see some solid returns from this stock level. But keep in mind, I do own shares of Alibaba, as I showed you at the start of this video. So don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, have a wonderful rest of your day. And for the joke of the day, what do you call a priest that becomes a lawyer? Check the comments down below for the answer. Thanks for watching.